If you use support and resistance correctly, it can be one of the best strategies that you can use in the market. Yes, I think one of the biggest strategies, or one of the strategy that I've used today, that I've used from the beginning, is the strategy that I'm about to show you today, which I can teach to anyone, and I'm confident that if you go through that strategy and if you trade it as correct as I'm going to show you in this video, you are going to start making profits in the market. So this strategy uses support and resistance, and I think support and resistance is a very powerful tool. Before we get started, I want to thank Fastbull.com for partnering with us. So Fastbull.com is a website that gives you news. Let's jump into the video and talk about what is support and resistance in the first place. So if you don't know what support and resistance is simply points in the market or zones in the market where the prices have reacted to, and the price will likely react to that zone again. So let me show you what I mean by this. So let's say the market is pushing up here and then it reverses, right? What happens here is that there is buyers and sellers here. So the buyers are in control here. The reason why the market reverses at this zone is either there are now more sellers coming into the market, or else the buyers are now taking profits, right? So when this happens, the market reverses, right? And then if the market comes back up again, remember there were some buyers here in the beginning who was in profit, who saw their profits being reduced with this pullback right here. When the market reaches this zone, most people at this point will likely get out of the market if they are in profit, because they think that, or they believe that, this zone is going to reject the market again. So you're going to see that also there will be sellers who missed the chance to sell here, who will also be looking to sell at this point right here. So making this zone a very good zone for the market to react again. So this is the concept of support and resistance. So let me show you what I mean by this. So if you look into this market right here, you are going to notice that this market was moving to the upside and it started reversing at this point right here. And if we take rectangle 2 here and mark this zone right here, you are going to see that this zone, the market have reacted to this zone most likely because there was this zone rejected the market once here. And also if I do this and I go back with this market, you're going to see that the market have reacted to this zone countless times, right? So you can see from this zone right here, this is the same zone, the market is reacting to the same zone. You can see all the time the market is just reacting to the same zone right here. So it also reacted to this zone. So you can see that these zones are powerful, and if you create your strategies based around these zones, you are most likely going to make profits, right? So if you take another rectangle here and mark another zone here which have been tested multiple times, you can see the market have reacted right here again at this point right here, and you can see that this zone, the market will likely react to this zone over and over again. You can see here the market reacted again. If we mark any other zone above here, you can see the same thing happening over and over again. You can also see around this zone right here, you can see this is the zones where the market have been reacting to. If you are seeing this for the first time and you are saying, wow, I never saw this before, make sure you like this video or tell me in the comments. I just want to know where are you right now. If you look at these zones, you are going to see that the market have been reacting to these zones. So these zones are called support and resistance zones, and you can see that they work really well. So these zones you can trade in two ways. You can reverse the trend, or you can do trend continuation. So I want to show you best strategy on these zones, which is called the counter trend, support and resistance. So the way that this happens is, let's say you see the market which is moving in an uptrend like this. So the first thing that you need to do is to be able to read a trend using higher highs and higher lows. So you can see that this market started here, it moves here, it made a higher high here, and then it reverses, it made a higher low. So what's the next thing that we are expecting here? If this is an uptrend and the uptrend is continuing, we're expecting a pullback at this point right here. So if we are expecting a pullback, we want to know where is this pullback going to end, which is where the support and resistance is going to help us. So what do? We mark the zones, which is the zones of support and resistance. So which are the zones of support and resistance in these zones? So in this case, we are going to mark the two previous zones where the prices have reacted or last made a big big reversal from. So most likely it's these zones, the previous higher high, and this zone which pushes the prices above the previous higher high. So once we do this, the next thing that we are doing here is we are waiting for the prices to come back into this zone, and then it pushes to the upside, or we are waiting for prices to push maybe down to this zone right here, and then we expect bounce from these zones. So these are the two zones where we are only looking to place our trade. I will show you a complete strategy and live examples of the market doing exactly what I'm talking about right here. Now let's look into this market right here. So what do you see here? What we see here is that we have the market which started here, and then it pushes to the upside, right? Once it pushes to the upside, it made a reversal right here. After this reversal, we see the market pushing up again, right? So now we can be able to mark what our previous higher high and this zone right here. Once we mark these zones, the next thing that we are going to do is wait patiently for the market. So this is the strategy, right? So we mark here and then we mark here. So these are the two zones where the market is likely to go to. So in these two zones, we are expecting prices to come into this zone, and then on this zone, we are going to wait for a confirmation, or we are going to wait for an entry trigger. After this market creates an entry trigger here, the entry trigger can be just a green candle that shows momentum of going up this zone. It can be a candlestick pattern, it can be a hammer candle, it can be a bullish engulfing candlestick pattern, and it also can be a double bottom right here. So any of these things is going to be our confirmation. Or else, if the market breaks this zone, we want to wait until the market goes to this zone. We are not going to place any trades right here. We either place the trades right here, or we are going to wait until either the market comes to this zone and then it bounces to the upside. Now in this case, we are going to wait and see if the market comes back into any of these zones. So right now you can see that the market have came back into this zone right here. So the next thing that we are going to do is we are going to wait for any blue candle in this case, but for your case it can be a green candle depending on the colors that you use on your charts. So the next thing that we do is you are going to wait for a green candle, a candlestick pattern. So right now we have a candlestick pattern here. We have an inverted hammer candle, right? So this is an inverted hammer candle, and we are going to place our trade because of this. This shows you that there's starting to be competition in the prices. So since this market is going to the upside, we are expecting buyers to win competition. So either you are going to put your stop loss below this zone, but if you do that, you are going to need to place your take profit far away so that you create the good risk to reward ratio, which can be 1 to S, 1.5, 1.6, or even 2 to 1 risk to reward ratio. So something like this. Or else, if you want to be in and out of the market, and if you are willing to take risk, you can just mark this zone and then you put your a tight stop loss just below. So you can put an ATR indicator and then calculates from your zone 1 ATR this zone, and then you put your take profit before this previous zone here. Because what may happen here is that the market may move up here and then it reaches this zone which have been tested multiple times and then fails to break and then moves to the downside. So once you do this, you can be able to get into a good trade. So you can see right here that the market just went straight up, which is just an example here. This is not to say that you are always going to win, but this is an example. But what I wanted you to understand here is the strategy, how it works, which are the zones. So what did we do at this point, right? So let's do like a recap of what we did right here. So we said the first thing that you want to do is you want to be able to identify a 1, 2, 3 move. What is a 1, 2, 3 move? It's a move which you have an impulsive move, a pullback, and then another impulsive move which is going above this first one right here. So let's say the market is like this, right? You are seeing this impulsive move, the pullback, and then the market pushing to the upside. You might say this is not easy to see when the market is moving in real time, but if any of you who are watching this is in our Telegram group, you always see that most of the setups that I send you guys when I get them, I can easily get a market which looks like this, and then I tell you, wait for the market to come back into this zone and try to buy at this point right here. So what you are doing here, you are seeing a market which looks like this, and then you are marking this zone, which is our counter trend support and resistance zone. So at this point, we are waiting for the market to come back here, and then if it does, then this is where you find your entry reason and expect a move to the upside. So if you go into the market, you are going to see a lot of examples which looks like that. So let's say you are trading, you are analyzing your charts, and you see a market which looks like this. What is the first thing that comes to your mind? Most people would say, okay, I will mark this is a breakout, so the market is going down. And most people would chase this breakout, and then they will just sell here, and then maybe put a stop loss here, and then expect the prices to keep going to the downside. Most likely it's not going to happen. Why? Because since the market have been moving in a big impulsive move from here all the way down here, the market needs to breathe. The market needs another buy orders here so that the sell orders can get filled. So the market is going to almost likely reverse at one of these points. So if you see a big impulsive move, do not just chase that impulsive move. The best way is to mark the previous zones. Mark the previous zones where the market have reacted to. So mark this previous zone and also mark this previous zone, because the market, for it to move to the downside, it needs, there's balance. That's why you see that the market always makes impulsive move and pullbacks. There needs to be balance of orders. So if the market is making a big impulsive move to the downside, it needs to breathe, it needs to reverse, and then that's where the reversals comes, and that's where most people lose money, when they just try to follow the market, right? So when you mark these zones, you are going to wait now for the market to push into one of these zones, right? So what happens, not always, but most of the time, you can see that the market pushed back into this zone. Now there is a little breather here, so you can see the market move down, a little breathe, move down, a little breathe here. So this is where you want to place your trades now, because now there's now buyers who have been caught into this. So there's now enough orders for the sell orders to go to the downside. Hope you understand that. Maybe I didn't explain it correctly, but well, you understand what I mean. So now this is when you want to your sell orders, if you are selling, right? Because now you have gotten the reversals, right? That's when you put your 1 to 1.5 risk to reward ratio, and then you see what happens in the next move, right? So as you can see, the market just got about to our stop loss. So what happened here? Okay, first of all, this was going to be maybe a losing trade. Most likely this was going to be a losing trade. And you might say, okay, Courage, why show us losing trades? Well, that's exactly what I wanted to do. I wanted to show you that sometimes you might catch this in a wrong way, right? Here you can see that the market really reversed to our zones, right? But I placed the trade too early right here. So this is something that may happen, and then it is something that is going to happen, because every trader is going to lose money at some point. This is why when you get this strategy, you want to go back and backtest this strategy multiple times, and then once you backtest this strategy, you can have confidence on your strategy. You can know the drawdowns, the average win rate, and you can create different risk to reward ratios and see which one is you are comfortable with and which one is profitable for you. So this is exactly what is going to happen sometimes in the market. You are going to lose trades, right? But after losing this trade, the next thing that happens is interesting. The market came back into this zone and gave you a black candle. It will be a red candle for you as an entry reason again. So you do something like this. So you sell, put your stop loss above this zone, and then you put your 1.5 to 1 risk to reward ratio. It can be okay, right? So the next thing that happens is this trade was going to keep again playing with your emotions, the market coming back into this zone, but most likely the market is going to reverse right here. Just an example here, but you can see that there's many things that can happen in the market. You can see how much this trade would have played with your emotions, the market coming back 3 times into this zone, and it might be because the market needed more buy trades for it to create the momentum to push to the downside. So this is exactly what happens in the market, but this was a good example for me to explain all the other things that may happen in the market. This is why it's not enough for you to just say, I will master this strategy to make money, I will master this strategy to do this. It is why you don't need to just think about the entry. You also need to have a good risk management plan. You need also to know how to control your emotions. So the way that you can do that is, of course, by creating that confidence, by backtesting. That's how you put the work. Backtesting is basically the hard work of a trader. So when the trader says he works hard, most of the time it's all about backtesting strategies and trying to find an edge in the market. Now, here's an overview of the strategy that I was talking about. So you may take a screenshot here. I said, number one, you need a 1, 2, 3 move. So you need to be able to capture a 1, 2, 3 move. You need to see an impulsive move, a pullback, and another impulsive move. This impulsive move should go above this zone. This is what you need to do. Then second, you will need to take the recent support and resistance, which is this zone and these zones. Mark these two zones only. And then number three, wait for an entry trigger. I said it can be patterns, it can be candlesticks, it can be anything that you want, right? Then stop loss can be 180 below the zone, and then your targets will be 1:1.5 risk to reward ratio. So that's the strategy in full. Thank you guys for watching this video. If you think this video was helpful to you, make sure you click that subscribe button and make sure you leave a like so that you can help me with reaching more people, and also share this to your friends. You might help someone else. Thank you for watching, and I'll see you in the next video. Before you go, I want to tell you, if you want to get more of these free lessons and free live sessions, you can go to our Telegram channel. I'll leave the link in the description below.